Let's bring in Mark Avallone, president at Potomac Wealth Advisors. Mark, good morning. It's great to have you here.
Morning.
All right, so we just laid out the stats. Since '86, August, the worst performing month for the markets. Do you see a similar setup, an August swoon of sorts coming up?
Well, we may. I'm not sure if it's related to the calendar, but I think it's more related to this massive unabated run-up we've had. Euphoria, groupthink, over momentum here. Not really what I like to see as an investor, where I want to see fair valuations for what expected earnings are against a reasonable inflation or interest rate backdrop. And I think the market is disconnected from all those massive fears of 2022, where we were so worried about inflation and rates and how that would affect growth and tech, and that fell on its face. So conventional wisdom may be an enemy here for the investor, and I think they need to be a little cynical, or at least curious about some of these wage reports we're getting about higher wages, and really question the quality of the earnings we're seeing and will see going forward.
All right, so you mentioned wages. I know that's something that you're watching pretty closely. Just a couple of days ago, we had the ECI report. That's the Employment Cost Index from the Department of Labor. It showed a pretty strong uptick over the last 12 months, about 5% uptick when it came to both wages and compensation. How do you see that weighing on the markets and earnings going forward?
Well, I think all this data that we're getting now is looking backwards. And yes, overall inflation has come down, but you're making a great point about this employment cost index, and it has risen significantly. Had a little bit of positive movement in the last month or two, but that was before we saw these massive union contracts with the United pilots. It made American go back out and give another $1 billion to their pilots. UPS and the Teamsters did a solid job for their members, which is what they're supposed to do. And now we're looking at UAW negotiations. Even if you're non-union and you see 10% annual raises that the pilots got, you're going to try to get a higher wage and benefit package. And I don't see why the stock investors are thinking inflation is totally in the rearview mirror when we have massive wage gains right in front of us.
All right, so you're looking forward at the forward impact. So is the issue here revenues, margins, earnings, all three? What do you see the impact being, and then how does it impact the markets if these companies do see higher wages?
Well, that's a great question. And my first answer is it's definitely going to be, it's not going to be no impact. So it's going to have an impact.
Right.
So what is it going to be? Higher earnings, but that could be at the cost of higher inflation. At the least, it's going to be inflationary. The worst case is it's both inflationary and it hurts earnings. So I'm not sure that higher wages have ever been a positive for corporate earnings. In fact, there's a strong inverse correlation between the cost of wages and stock prices.
All right, fair point.